Good morning. Hap-
Morning.
Happy Sunday.
Happy Sunday. We did it.
We did. It's Real Estate Sunday.
Real estate. It's always real estate Sunday.
And the buyers are ready. They're
And
having their
buyers,
coffee. They're
and so are
getting,
we.
yes.
Yeah.
Great.
Awesome. Well, thank you so much for joining me.
Yes, thank you for having me.
All right. So, let's just give a little bit of a background, who you are, where you are, what you do, what's your specialty, and then one tip for the day.
Okay. Um, I'm May, Montana with Guaranteed Rate. I work for a very large mortgage bank. We're in the top 5 in the country. The difference is really for consumers or buyers is they can go to their bank or who they bank with, and then you're really just subject to those products. As a mortgage bank, we can offer you loans with Wells Fargo or Citi or credit unions. I've been in the industry for over about 17 years now, and my office is in San Francisco, though I live in Oakland. So I serve the entire Bay Area, pretty much California. And yeah, it's a really hot real estate market. I would say in the Bay Area, being the most competitive in the country, my tip to any new home buyer would be to start, if from the moment that home buying enters your mind, to contact a mortgage advisor of your choosing, or even if you want to interview a couple of them early. And don't be afraid about your credit, that you don't want to move forward because you're just thinking about it. It's kind of like going window shopping and you haven't opened up your wallet or your
Okay.
pocketbook.
Okay.
You have to know how much you need and then have the expectations. And it really takes 6 months to 2 years for some people before they actually buy, from the moment they start thinking about it.
Okay. So you mentioned a little bit about what guarantee is and how it differs. Can you elaborate a little bit more and help listeners understand why they would choose any specific lender, either based on brand or you know personality fit in terms of the loan officer? What do you have to say about that?
Yeah, well, there's a lot of choices, and I think a lot of people are used to being online. So there's a lot of mixed messages online about, what rates are doing or what products are available. I think it's a good place to kind of get a little information, but each person is entirely different, from credit scores to incomes to how much reserves they have after the close of escrow. So, there's a huge disparity between different banks, and the larger the bank or mortgage bank, typically you'll probably get the better interest rates. Your little credit union really isn't geared towards best interest rates for consumers. They're a community lender, and they're okay if you are in a suburb. But given that we have very unique properties in the Bay Area,
Right.
Kind
um,
of, I'm sorry, where all the properties are typically the same, like tract housing, where it's kind of a vanilla product and it's a vanilla kind of loan.
exactly, exactly. And when we mean by vanilla is that somebody's buying a single family house, they have at least 20 to 25% down. Their credit score is above 740 or 760. And they've been at their jobs for, greater than 2 years.
Mhm.
That is the overall perfect profile, generally speaking. But then when you get a little bit more in depth about credit, you have to have a certain amount of credit lines open in history scoring, meaning even if somebody came here from, and we get this a lot for tech, somebody comes here from another country, maybe the UK, and they go to work at Apple and they're making 600,000 a year, doesn't automatically get them a loan because they don't have US credit history and they don't have enough of it.
Right.
So it's really important that, people talk to, at least start with maybe 2 or 3 lenders And, as a mortgage advisor, a lot of us in the industry are like, oh, we have a rate shopper. But I like that. I think it's good because people are doing their homework up front. And then once they've decided based on, basically, if the mortgage advisor you're working with is responsive, are they efficient? Are they knowledgeable and experienced? And do they work well with the realtor of their choosing? Because really, you need a team to get you past that finish line when it comes to buying a house.
Right, right. True. Yeah, so that's good advice. So in terms of credit, that big, elephant in the room that is so mysterious and so challenging for so many people to get their hands around. Can you just speak a little bit to how credit affects what we call pricing?
Yes. So the foundation of underwriting for all lenders, we all use what we call a tri-merge credit report. And there's three bureaus, Experian, Equifax, and TransUnion. And all three of those bureaus go into one report. And basically, we all do a hard pull in order to do a pre-approval. So you have consumers that are out there getting Credit Karma or Vantage scores. And there's a lot of products out there for consumers, but the most accurate in terms of scores. And by the time they apply, they are surprised because the score is not what they thought. And then in turn,
Oh, because those are consumer credit scores. Those are, if you go to buy a washer and dryer at Lowe's or Target or something, it's just giving you that. But the algorithm is different for mortgage. I understand.
yes, exactly. And so what happens is, I just had such a case last week. I had a borrower apply. He thought his credit was good. It turned out that his credit score was 681.
Mm.
So the mortgage rate for him, he was going to put, I believe, about 5% down. The rate between a 681 credit score and a better score, say 760, the interest rate was only an eighth apart. So instead of 30-year fixed at 3.75, he was going to get a 30-year fixed at 3.875. So
Mm-hmm.
that's not a lot, but where it really hurt him is his mortgage insurance. His mortgage insurance with 5% down would have been around $216 a month with 680 FICO. And then if his credit score was above 760, he would have paid like $80 a month.
Wow.
Yeah. So that's a pretty big, yeah, it hurts the pocketbook. And it's best to start off in the very beginning, because once you obtain that mortgage, you have that mortgage for 30 years until you refinance or pay it off.
Which isn't cheap or free. Yep. Yep.
Yeah, exactly.
So in terms of, gathering the proper documentation for a loan, what does a buyer need to start, getting in their piggy bank, their bag?
Well, they need to have their current pay stubs and their last 2 years tax returns and W-2s. For people that are salaried, where they're being paid and taxes are taken out from their company, sometimes it just requires a pay stub and a W-2 from the last year. But sometimes people have other side jobs or hobbies or photography or something they have on their taxes,
Mhm.
and that can actually take away from the income that they're earning from their W-2 jobs. So anybody that's self-employed or have little hobby businesses or something that they've put on their tax returns will need a full 2 years of tax returns.
Got it.
And, sometimes people don't have their W-2. So they will have to contact their HR of their employer, and it might take, maybe a week or two to get that to them so that they have that available for their pre-approval.
Okay. Yeah. So it's best to come with all of that, in a nice shiny box for you. What about, talk a little bit about down payment assistance programs? I don't know if those are available throughout the country, but I know that here in the Bay Area, we do have them, and they are somewhat complicated. So can you unpack that just a little bit for us?
Yeah, and some people call and they say, hey, I'm a first-time home buyer. Are there any programs? And so we would imagine that there are programs to help people, but really it's a disadvantage in the Bay Area. There are programs, and the largest program being in the city of San Francisco, because they have mandatory inclusionary housing. So where does this money come from to help consumers? It's not at the goodwill of big corporations. It's really local governments that have identified that housing is a need, and they've set aside money. And in the case of San Francisco, the developers are setting aside 15 to 20% of their buildings for affordable housing. And they also put money into the program. So it's always been fueled year after year. The city of Oakland has a program, but it's not always available. Sometimes they run out of money in the middle of the year, and it gets replenished, but it's not as much. And then currently we have a countywide in Alameda County. And again, the funds are very limited, and sometimes it's run by lottery. And then I know in outlying areas like Emeryville has some below market rate units. So there's a lot of assistance within the Bay Area. And the assistance varies. When we talk about down payment assistance, like Oakland, they have money where they would give you some extra money for down payment. It could be $50,000 to $75,000. And what that does, it helps a buyer add a little bit to their down payment and their closing costs. And it also boosts their purchase price. So it helps them get into, say, they can only afford a condo of $400,000. Maybe that'll get them into a condo of $450,000. Then there's other programs like CalHAFA, which is a state program, and the money that they give you is about 3% of the purchase price. That's not enough to boost your purchase power, but it is enough to get you down payment or extra closing costs. Some people maybe only have 1% or 2% saved for a purchase. This money kind of bridges that. So it is almost like 100% financing. I mean, there's a lot of things that go into it, like homebuyer education, but they're all really good programs. It just depends on the needs of the buyer.
Right. So I hear that. What I'm hearing is that at the state level, there are programs, at the city level there are programs, the county, there are programs, and you just have to figure out which one works for you in your situation.
Exactly.
Right, right. So then let's talk about why it's important to get pre-approved before you start the process of actually looking at or searching for homes.
Okay. Well, I think really it's to set the foundation for expectations. And it also helps buyers work with their realtors, because a realtor can't really show you properties that you think you want to buy without knowing how much money you have down and what you can afford. So getting that off the bat is so important. The other thing that happens is sometimes people have credit issues and they haven't looked at their credit ever, or maybe in a couple of years. And working early allows your mortgage advisor to help you understand where you are with credit and where you are with interest rates. They will outline for you your down payment necessary, all the closing costs, understand what escrow is and what they do, all the fees that are associated with that, property taxes, and insurance. It's very overwhelming, particularly for people that are not financially savvy, or I mean, there's some people that are very quick to understand, and then there's some people that take a couple of times to explain fees before they get it.
Yeah.
But so that you're not constantly just window shopping without knowing if you can buy what's behind the window. It's knowing what you have.
Yeah, and it's really important from the realtor's point of view, because like you said, we want to know that what we're showing you is within your price range. It's going to be affordable and comfortable. So I've, definitely helped people who are buying below what they're qualified for, just because they want to be comfortable with their monthly payment. They don't want to be overextended or house poor. So getting that, working understanding in that framework laid out up front is a healthy financial exercise to help keep people responsible and to guide the search, more effectively. So once they've gotten pre-approved, they've done their shopping. We didn't talk at all about condo versus house in terms of HOAs and how that fee gets calculated into the monthly payment. A little bit about that.
Yeah, so if you are thinking about a single family house versus a condominium, if you're looking at exactly the same price point, let's say 400,000, your house monthly overall housing payments, the mortgage, taxes, and insurance are typically going to be a little bit more affordable than a condo, because condominiums is like a membership to a building where you own your own unit, but you're still collectively under one roof and you're collectively sharing maybe an elevator or common areas. So because of that, there are homeowners association dues that are paid to the condominium homeowners association. And those dues typically can be anywhere as low as $250 a month for a very small, say, 4-unit condo complex, to something like a high rise that's 10 stories. Your dues can be as high as almost $1,000 in the city of San Francisco. Right. And those dues are not stagnant, because every year costs go up to replace windows or repair the roof or siding or garden maintenance. So those dues may go up ever so slightly every year. So it's good for home buyers to understand what's involved in that kind of ownership.
Got it. Okay. So that number, that HOA, gets calculated into, the monthly mortgage, and so it does affect whether or not people can afford more or less based on whether or not it's a high rise or a low rise, like you were saying. So then once they've decided and they've found the perfect property, what happens? How talk about the tandem effect of you and I, or a lender and a realtor working together?
Well, from the pre-approval process, the buyers and I keep in close touch. As soon as they see properties of interest, they usually email me on a Sunday or the weekend after they've seen something. And then I'm doing outlines for them based on their desired down payment. And offers on properties can be due really quickly, or because they've just found something where it's getting ready to go, or maybe offers are due in 2 weeks. So basically, we would all powwow, the buyers, myself, and the realtor, such as yourself. Wonderful realtor, by the way,
Thank
Karla. And we would talk about what's required. What is the motivation behind the seller? Do they want a quick close? Do they need a long close? I have somebody in contract right now, which is rare, on a 45-day close.
Oh, nice.
And the reason the buyer was accepted by the seller on that long of a close was because the seller was in bad condition and is ill. And the buyer was very flexible about letting them stay in the property. And they also negotiated a small release of funds to the seller so they can move, because they literally have no money.
Oh, boy.
That is very unusual. It wasn't a lot of money. I believe it was something like $2,500, and then at the close another 25. So an overall $5,000 to the seller to help them with their moving expenses. And something like that really went a long way. So those are the reasons why, as a team, the buyer, the realtor, and the lender work together. And then we understand the timeline. Sometimes it's really quick. Maybe sometimes we have to close in 2 weeks, in which case the lender's prepared. As soon as the buyer and the seller are in contract, we're ready to move right away. Order the appraisal, know exactly what the condition of the house is in. Maybe there's some other nuances that might need to take place. But then just for everybody to work together.
Right. So it's the appraisal, And then do you guys do pre-underwriting at Guarantee Rate?
Yeah, we do. And so what that means is we take the entire file income assets and we send it to an underwriter, and they've approved the buyer. So the buyer still has to identify a property. So what's still out there is as far as step two. So it's a two-step process, but the buyer gets approved and then the property has to get
Right.
approved. And when the appraisal report comes in, that's typically when it gets approved. But actually, Karla, in the last 2 months, I have received on 3 purchase transactions with over 20% down an appraisal waiver. That means that the value of the home is within reason,
Okay.
and the bank understands that, and they've waived the appraisal report
Interesting.
because there's enough data
Right.
in what there's portals out there and a lot of different background stuff, but they've believed that. And so we have not actually required an appraisal on a purchase, but this is really limited to loans under 723,000.
Right.
Once your loan is really big, over $1 million, you're really going to need 2 appraisals.
Okay. Yeah, in the day and age, with so much data available about so much, including, property values, property condition, property prices, I definitely see that becoming more and more prevalent. So that's good to know that you guys are on the cutting edge in that way. And then when we get to closing, what happens?
So the buyer is chomping at the bit to get their keys.
Totally.
So sometimes we joke around in the industry is all they want to know is, how do I apply? When do we close, and where are my keys? Right.
Totally.
So we get that. So we get that sometimes. But so basically, once the report comes in and the bank signs off, then the loan documents go to the escrow company, the neutral third party between the buyer and the seller, and the buyer is called upon to come in and sign the loan documents in front of a notary. And after the signing, the bank will then wire the money to pay off the seller. And then the escrow company records the deed of trust in the new buyer's name. And then they can get their keys and everybody celebrates.
Keys, woohoo! Yes,
I know.
yes. It is I've never done anything that makes me more happy than, handing over keys, because we do change lives. We're up there with brain surgeons and OBGYNs, in terms of how we affect the trajectory of people's lives. It's very rewarding work, and it's always a pleasure to be on a team that makes that happen for families.
Agreed.
Yeah. So, in terms of your style, a little bit about how you work with your clients. What makes you different from other loan officers?
I would say that I'm very hands-on. I'm really good at working with tech workers that can do everything in 30 seconds, and they don't really need a lot of help through the I think they've probably read everything online, but I'm also really good with first-time home buyers, helping people through credit, understanding the programs. I meet people in person. I request that they, if they want to, I would like to meet them in person, but a lot of people don't anymore. But that my loan closure rate is really high. I never have deals that fall out because I do all the investigative work up front. So the property, if there's something going on with the property, I ask the right questions of the buyer, the realtors. Is there any health and safety issues with the property? So we can work through them so there's no surprises in the end. And I think that's really important because everybody's so busy and they forget there's little things that are really important to the lender. We educate upfront, and that is the most important thing I find is missing, is educating every aspect. I mean, I'm probably generally to about $100 within the close of escrow, exactly how much somebody's going to need to come in. I prorate the taxes, I get the transfer taxes, and we talk about all of this up front. So when buyers go to sign, they're not nervous, they're happy. They're
Yeah.
looking forward to, there's no, oh, I didn't know this happened, or I didn't know, that happened. We've already gone through every single what if that could happen with respect to having the loan. So I think there's no surprises. And that's something I really pride myself on, is to make sure. And sometimes people don't like what I have to say. If a buyer really wants to make an offer, let's just say on, I had a client a couple months ago, and they weren't really using a realtor. They're doing everything online. They kept identifying properties that were teardowns, and they didn't understand that these all had health and safety issues,
Oh,
maybe broken windows and bars on
right.
the windows, and a living space that was uninhabitable, or stairs that looked
More
unsafe.
insane. Yeah.
Yeah, and so those kind of things I can't really do anything about, but just trying to educate people the reason why, because the property is a collateral for the bank, and if a buyer doesn't make their mortgage payments, they will take the house back and then put it on the market. And if the house is in such poor condition or is not marketable, it's a problem. So
Right.
health and safety issues are always really important.
Good. Good, good. No surprises. I love that.
Yeah.
Well, thank you so much, Miss May Montana. How can people get a hold of you if they'd like to hear more or work with you?
I would say email or call or text, whatever your choosing is.
What's your email?
My email is may.montana@rate.com, and my number is 415-710-6651. And that's my cell, so I can be texted at that as well.
Well, thank you so much for joining me. I
Thank
really
you so much for your time.
enjoyed talking to you, and we will be in touch.
That sounds fabulous. Happy closings.
Happy closings. Thanks, May.
Thank you, Karla. Bye-bye.